Hello, welcome to Arista Advice. Question week is, Paul, what does historical data reveal about the performance of value stocks compared to growth stocks in the US? And what's the average annual outperformance since 1927? Well, the last couple of years, growth stocks have been on a tear. Ever heard of Apple, Amazon, Microsoft, Facebook? These are companies that are called the Wonderful Seven, and they've been driving 100% of the growth of the S&P 500 in the last many years. But there's another secret part of the stock market that Warren Buffett, Bill Gates, and many other individuals and organizations and institutions have been investing in that have really been growing their wealth, and it's called value stocks. But value stocks have been underperforming and have not been delivering the banner news that the Wonderful Seven have been delivering. But they do well, and they do outperform the market in long-term periods. But you have to be patient. So let's look at the data between value stocks and growth stocks. On average, value stocks have outperformed growth stocks by 4.4% annually in the US since 1927, as you'll see on this chart. Also, historical data strongly favors value stocks in the US, known for their lower relative prices and higher expected returns over the past century. Third, although there have been occasional disappointing periods, the overall principle of lower relative prices leading to higher expected returns remain valid. And fourth, value premiums have often been significant, with an average premium of nearly 15% in years when value outperformed growth. Value stocks have low debt, they have nice dividends, they have high book to market, and over time, Wall Street favors those companies instead of growth stocks that borrow and grow and borrow and borrow and borrow and sell ideas. At the end of the day, you have to deliver a product and goods and services. And value stocks going back to 1927 have outperformed growth stocks. But in the short term, don't get swayed. Always stay focused. Always have a plan. Always have a prudent withdrawal rate, a prudent contribution rate, and stay invested and be a long-term investor in a short-term world. Remember, go to aristawealth.com to get other videos, tools, tips, and resources to help you live a life of significance.